Today I'm talking about chart patterns and what to look for and what considers them valid and not valid. This is the kind of what we're going to be looking at, a bunch of these. You can get more info at finvids as well as the patternsite.com. So the first one is the broadening wedge. This is just starting from the top. Broadening wedges I don't really look for, and they just kind of happen. They're really hard to gauge because you have a narrow point and then you kind of broaden out, and it usually stays within this. And then once, of course, you can grow this broadening wedge. You'd first put it to here, and then you kind of put it to here, and it's not really a great indicator, I find. Most of the time they go down for ascending broadening wedge, but not something that I really look for. They just kind of happen, or they might be something that might be happening because of a different pattern as well. So not something I use, so I'm going to skip this one real quick. Next one is a channel. Channels are basically some sort of two perpendicular areas with a trend line in the middle. That's kind of how you confirm it. You start by putting, a bottom and then a top and then a bottom is how you usually scale these. You don't usually start with the two bottoms and then a top. I don't really consider those valid perpendicular lines. And also you can get confirmation if you have some struggle around the middle of the trend line, as you can see, as well as after you draw your initial chart, which would be about to here, and you see this, and then near the top, and then in the middle, and a bottom. This really helps you confirm the channel is valid as well. So this is ETH BTC. This is a big one that I always watch, and this is what they generally look like up here in the top right. So they can be down as well. Here's one that is valid. That's a down one. This is on BTC. You can see a top, bottom, top. That's what you're looking for a downtrend. And then as you see, we have some struggles around the middle. And then later on, as we found out, that was more of a bigger channel. This was our previous top, bottom, top. And you can see that we hit a bottom here. So now I have top, bottom, and then another top here to confirm that this is the channel, which also lines up with this and our previous one. And you can see the struggles and trying to keep this above the trend line. And then you're looking for some sort of breakout in a downward channel because, we're not going to go down to negative numbers, of course. But so that's going to be usually a tough area of resistance when we have a strong downward channel like this. A channel that's not valid is when you have, let's say, a bottom, bottom, and then you try and find a top. You can see this channel doesn't work out at all. This was on Ethereum, Bitcoin, and as you can see, this didn't play through. So that's why you need that bottom, top, bottom, or a top, bottom, top to confirm that. And then also some struggle around the trend line, which isn't really happening, as you can see. Next one's a cup and handle. This one's a very small one. Usually they're quite big and rounded bottoms, and then they have some sort of a little fallback, and then they're gone again. And they usually go up, or the way that the cup is facing up. So that's usually what they look like. Nice rounded bottom, and then a little bit of a slide, and then up, just like that. Here's another one that's valid. A big, nice rounded bottom, and then a little bottom here for the handle, and then it's gone. The more it fits a rounded bottom, the more accurate that is a good signal and clear signal. If you think of it kind of like, I don't know, Mario Party, where you'd have some sort of drawing, and then you have to match the drawing, in the party game, and whoever's close to get a good percentage, and then you win, right? The same with this. You want a nice rounded curve, kind of like this. And you can see it goes in and out, has a little bit of spikes here and there. It's kind of like, if you think of it as almost like jitter on a line or something like that. And that's because this is to ETH USD, and this of course is playing with the BTC ratio, as well as Bitcoin's doing its own thing as well, so that kind of messes up the perfect pattern. But you can kind of see this forming just like that. Inverted cup and handles are basically the same thing, just upside down. Sometimes they'd be angled like this, and this is what they look like, and they usually go downward in that kind of shape. This one's valid because you can see how nicely it fits, and then a channel, and then it's gone. Another one that's valid, like this, and a little round one, and then usually we go down a lot further. This of course is to BTC on the 1-day USD, and there's lots of other lines and patterns in play that is preventing us from going down here so far. I guess we'll find out if we keep going down. But this one you can see there's a little bit of a divot in your cup, and that's usually because this is a different pattern that I'll go into, which is more of a double top. Something that's not valid, obviously, if you have some sideways action in the middle or something, and you see how nicely this does not play out, obviously you're going to have some sort of failing pattern. So you can't just kind of make these up. They kind of have to fit the pattern more than more than, at least 50%, I'd say, somewhat fit the pattern like this. Next thing is an Adam and Eve, which is kind of like a very sharp bottom and then some sort of rounded bottom. This was on ETHUSD back in June to December or so. And this was one sharp bottom, and you find your bottom kind of thing. And there's patterns inside patterns, and I'll go into that next video, or the next slide, sorry. But basically, this is a V, and then a U, an Adam, and an Eve, and that's usually your reversal sign that you're going back up. Another time it's valid. Right here it was valid. On big sharp down, this was in February. Big spike up and a nice rounded kind of bottom. This one didn't play out. There is a downtrend line in play, sorry, that kind of overtook it. Plus, there's some other patterns and angles and channels going on in here that kind of overcame this. But this was what everyone was looking at. And then you run this with a stop loss, of course, especially when you're getting near a downtrend line, which helps you prevent any further losses like here. So you ride this one up, and then this, of course, is also a double top, which overtook it with the downtrend line. And then that's what happened with this one. But this one was a valid one, just didn't play out because of the downtrend line and other factors. An Adam and Eve that might be possible right now. This was a few days ago that I made this, but big sharp here, and then a little bit of a waiting period, which is almost kind of like the cup and handle here, and then a bigger rounded bottom. So it's kind of like we're playing off this bottom with this Eve here, and you can see they're pretty similar in bottoms. So this might be in play. I guess we'll have to see. This downtrend line is coming up next few days here, so be something to watch for. An Adam and Eve that's not valid. Of course, if your triangle is kind of messed and you have some sort of pump and then a little bit of a dump, that's not really a bottom. That's we're still continuing up. So this one is obviously not very strong Adam. It needs to be a nice V shape. This V is a little off, as well as your Eve is way over here, which is kind of out of whack and it doesn't even fit. So this one's not valid. That's something that you wouldn't be looking for. Adam and Eves can also be upside down, just like your cup and handles. So you have an Adam here, and then an Eve, and then this is the neckline that they both play off of, and then usually it means you're going down further. This one's a little messy because it goes a little bit out of whack. So it's not a true Adam, but it's similar, right? So there's another pattern or two here in play that you can try and find if something doesn't line up like that to see what's actually going on. Dead cat bounces. I don't usually trade these because they're really risky, and usually you have a stop loss in play that would hit out before you hit one of these, and if you unfortunately hit one of these, you're looking for a dead cat bounce, which means some sort of bounce after a sharp decline. These happen after a major event, such as a coin dead, or the CEO of the coin is trying to leave the country, in this case. But basically you have some traumatic event, and you're going to have a dead cat bounce where you pop back up just for a little bit. The gains from the very bottom to here are usually decent, especially in crypto. There's your dead cat bounce, and then you're dead. Your coin's dead. So this is kind of your last chance to get out. Here's another example. This one's BitConnect. We all know what happened to BitConnect. It just died. So it falls off the wagon, you have a dead cat bounce, and then it tapers off and it's dead. They can also happen upside down. This one is Z Classic. So there's some sort of event that was coming up, which was the fork of Z Classic, which went into Bitcoin Private. And basically we went from $4 up to 100, and this was 243 was the top. So this right here is your bounce, your dead cat bounce, and then it shot down again. So it's some sort of traumatic event, and you don't usually play these. They just kind of happen if you're in the coin before. That's basically what happened. Dead cat bounces that aren't valid. Coins that just came out will have a giant spike down, a little bit of a bounce, and then they continue to taper off to find the bottom. These aren't dead cat bounces because when a coin gets added to an exchange, it's usually very volatile. It's trying to find its price. So you can't really consider it a dead cat bounce. It's just how the market reacts. People that got in ICOs will obviously try and sell at the very top, so they'll sell going up, and then they'll catch the bottoms, and if they like the coin, they'll stay in the coin, and that's basically how that happens. So this one isn't valid. Same with Ethereum. We all know Ethereum wasn't a total scam. Basically, when you have this giant wick here, that's because on the very first day it comes on the exchange, people are trading it so often, and it's trying to find its bottom. Once it's found its bottom here, has a little bit of pump, and then it continues on its path, just like that. Diamonds. Diamonds I find are a pattern of uncertainty. Sometimes they're used as a diamond top or a diamond bottom, and that's because the market is uncertain. Ethereum had one around here, around 600. You can see that we start kind of skinnier, we go up. We also have a spike or a major event candle in the middle, and that's usually where you can see that the market's undecided. And then we pinch again, and then we're off. And that's kind of how these diamonds play out. Not a valid diamond. This diamond's pretty messed. You can tell it's not really valid. It's going from a middle here to a top to a low, and then back to a middle. It's not one traumatic event. It's more things in play like this, right? So your diamonds need to be more diamond shaped than trapezoid or whatever you would call this one. Diving boards are usually some sort of stable price action, or maybe a bottom or something like that, and then a sharp dip to stop loss hunt. Find people that have stop losses, get them to trigger, so that the whales or whoever would get a good discount right before a giant pump, and that's usually what happens with diving boards. Not a valid diving board, obviously there's nothing here. This is just normal sideways market action going on. Candles are not that big. There's none here. There's none behind this one. They're uncommon, but they're also common. You usually don't play them. Usually you just happen to come across them. So that kind of gives you the diving board pattern. So another thing is called an Adam, which is kind of like your Adam Eve, except for it's two sharp drops. And as you can see, they don't really have the same neckline. But people will usually play a double bottom with a little pulse in the middle here. They'll just buy the coin regardless, and that's kind of why you see these surges up after a double bottoms, because people just play this based on that. It usually means some sort of reversal, so it means it should be going back up, but there's bigger things at play, and there's downtrend lines and stuff too. So another double bottom. This one's valid. It's a little weaker because of the downtrend. You can't really call this downtrend a downtrend until, of course, it was confirmed, but basically you can have double bottoms inside of double bottoms, and then when we break some sort of downtrend line or a double bottom, you can see that people just buy it for no reason, and then that's where this little pump comes after a double bottom. Sometimes it's strong enough to keep going up, and that's where you keep going up. Other times it was just people playing this double bottom just for the fact it was a double bottom, and then you can see it was pretty weak and it came back. A strong double bottom, in my opinion, this is ETH USD. So this was back when Ethereum was nearing its bottom in about July. So this is your double bottom. We had a downtrend line, and this double bottom, a little bit spaced out, went through the downtrend line to basically retouch everything. And you can see this when we connect the two bottoms, and then when we have this major downtrend line, you can see how it kind of rides on it a little bit. This was more of a test of strength almost. But this double bottom is very valid because we're breaking the downtrend line at the same time as a double bottom. And that's what I think gives it its strength here. Not a valid double bottom. Some people might always be looking for double bottoms. They need to be really sharp and usually consistent. This would be more an Adam Eve, but you can see how well or how not well this plays in a triangle, right? It needs to be more closer to these lines, or more kind of perfect. The less perfect it is, then it's not really that true, right? So yeah, your double bottoms kind of want to be similar, somewhat. And then this, of course, is just a single bottom, which isn't a double bottom, right? So a double top. This was one that I was actually looking for back in June of 2017. This was on Ethereum. And I remember these days because when you go up and up and up, you hit a top, usually you'll have a giant spike down. And in this case, the spike down was 28%. So imagine if you woke up and you saw, $150,000 in your account because you're all in Ethereum, and the next day you see, 70,000 or 100,000, you're going to be like, oh, your heart's going to sink. Usually in that case, in the case that I came across, that's when I was like, okay, I'm selling on the way up, which I sold on the way up, and then I got all out around here because of that freak moment here, and then I just kind of waited for the market to decide, and that's when it tapered off and it continued down the path it went, and then it continued on from there. So usually when you're going up, you're looking for either head and shoulders, which will be next, or double bottom, or double top, sorry, which was this. A double top that's not valid is if you have a giant top, a giant spike down, and if you're selling as you're going back up, you're not going to reach back near or even half of where the top was for that triangle. You can kind of see that this was a 20% pullback from here, so you didn't really get a second chance to get out. It was, you could have, but basically a double top is usually when the tops are beside each other, just like this, just like double bottoms are beside each other. Next one's a head and shoulders or a triple top. This one's valid. It's a little bit weak just because it falls a little bit out of the triangles, but basically what you're looking for is a left shoulder. When price went up, came back, shot up to a head, came back down to the same neckline as before, and then shot up and came back down to the same neckline here once again. So basically you're looking for a neckline touch once, twice, and 3 times you're out. So with the head and shoulders, your shoulders are below your head. The angle is pretty close to horizontal usually. It can be at an angle. Sorry, it can be at an angle, but not very steep. I don't consider head and shoulders to be a head and shoulders if it's on a 45-degree angle. That's just kind of absurd to me. But some people consider those head and shoulders, but I don't. In your case of a head and shoulders, usually the distance from your head to the neckline is usually your target of where you're going, and that's people don't believe it usually, but it can happen. I think this was Ethereum back in beginning of 2018 when it hit its top. I think it was around 1100, and it came all the way back down to 340. So that's just to give you an idea of head and shoulders. This one's a little weak just because it doesn't really fit perfectly, but that's what it looks like. Head and shoulders, this one's a valid one. It's a strong one because it fits pretty cleanly. This is low time frame though, so we're looking at 1 hour, which of course is a valid time frame and everything. But remember, people are looking for these a little too strongly because people that learn TA are basically, I know head and shoulders. Oh, that looks like head and shoulders, and I'm out. So they'll trade this just like the people that play double bottoms will buy double bottoms no matter what. So usually you have a big going up top neckline here. The candle closed, or the candle was touching, head, bottom, and there's your 1, 2, 3 times I'm out, just like that. Your distance, you want to go down, head to the neckline. Here's your head to neckline. This is where the area of support and resistance usually is. You can see we struggled here. Not a valid head and shoulders. When your shoulders are, of course, higher than your head. That's kind of weird because I've never seen anyone like that. But that's what that looks like. And this one is invalid. And this is more of that broadening wedge that I talked about at the start. This is kind of more price action going up, down. It's more sideways a bit. And if you're following this up, you'd be stopped out, in these pumps kind of thing. And you wouldn't be down here when you sell. Another head and shoulders, you could flip them upside down. What do you know? Just like anything else. So you have some sort of left shoulder going on here. And then you have a head. And then you have a right shoulder in your neckline. Your target is usually from your head to the neckline. Put that same distance up. Oh look, there we go. And I didn't draw these. These are perfect lines from here to the neckline. I didn't time this, but this is what it looks like, which usually means a strong reversal pattern. So that's why when people find these, they buy them no matter what, and then they sell them usually around the same distance as the head to the neckline. Not a valid head and shoulders. So this one I left out just because the screen here, so you can see it better. Basically, people were thinking this was a head and shoulders inverted, which meant we were going up. We were also touching the downtrend line, which didn't help. I didn't trade this one. I actually bought down here because I was trading my guppy at the time, and then this was more of a double top to me. But basically, what I think was wrong here is the left shoulder here came down. We don't have many candles in this nice V here, like this side. This was more price action, people getting stopped out, stop losses getting hit. We also came back up above the neckline. So one thing wrong, no candles following this very cleanly. Second thing, we came out of that neckline. And then 1, 2, 3, You'd follow this up with stop loss. We're also touching this downtrend line, which happened to be the third strike, and you're out kind of thing. And then we went down from there. Flags are very common. When you have a shot up, you'll have some sideways or some sort of price action. Flags can go up or down, just like this. And you have some sort of trend in the middle that's catching all the action as well. That's more of a valid flag. And really, you don't know where flags end, but they start to get more price action once they touch the edges, and then you shoot through. And that's usually what it looks like. Bull flags look like this, and going down it'll look like that, just like this. So this is more of a flag. It's very short. You can see shot down, and then we have some sort of flag going on here, and it continues on. Flags that aren't valid. This right here is a big kind of, this is almost like a double bottom V-shaped kind of thing going on. You can see we're in a downtrend, and then we see that we hit a steep downtrend, and then we shot back to the normal downtrend, which in my opinion isn't a real flag pattern. This one, of course failed, and yeah, you can't really claim a flag in my opinion if you just came back to a downtrend line like this. What you'd like to see is more on its own, like here, and then some sort of flag going on here, where you don't have some sort of downtrend line right above you, or you're cutting back to it. Pennants and wedges, these ones I kind of mark the same. They're very similar. So I'll quickly go through a bunch of these. Basically, I'll have some sort of bull flag idea here, and then it's more of a pinching wedge, just like this. Pennants are like this, where they're going more to the center, like that. And wedges are more when you're getting lower lows here from your big pump, and these are also higher or lower highs coming down. And you never usually make it to the pinch. If you make it to the pinch, there's another sort of lines in play. It's not really valid if you get to the edge. Usually they stop about 2/3 of the way down, and usually in a falling wedge case, they go up, like here, rising wedge. Usually when they go up like this, they'll usually come out the bottom, and that's kind of how it works. It also a little bit matters where you're coming from. If you're going up, you might reset somewhere in the middle, but basically this means that volume is usually tapering off at the same time. So just like here, they go down, you have a rising wedge again, and you continue down, just like that. Another one, you're coming down, it's a descending wedge or a falling wedge. In that case, usually the price goes up, just like that. And usually, 2/3 of the way down, never at the pinch. Not valid, you're just picking some random points. You're just like, I think that's a rising wedge, but it's like, where'd you come from? I didn't come down to it. It just kind of happened. You can't really claim that. This is more of a trend line, and this one, I don't know what I'd call this top line, but this isn't a rising wedge. Same with here. This is not a falling wedge. You're just picking a down point here, and this is more of a trend line. And then you're playing, oh look, we hit here and here, but you didn't draw this until these showed up, right? So this one isn't really valid in my opinion. This is more likely the case, but of course I don't trade broadening wedges. So what's going on right now? It's hard to say. Like, is this a pennant, or what is going on right now? This is when BTC shot up in here, December, and this is the current case right now. Is this a giant flag that we're going to continue up? It's hard to say, like, I think it might be, but it's questionable. You don't really know until you get out of the downtrend, and if we break this, we don't know where we're headed. So this is something questionable, something to look for. So you kind of play it as it goes. We keep getting closer and closer. Usually you'd want to break out halfway or 2/3. So it's ideal, but I guess we'll find out. Rectangles, so this is more sideways price action. If you were around ETH in September, October, November, you could tell it was stuck around 300. So this is where usually some sort of bottom or top happens around a rectangle. The price is so stable, You'll have random little pops. This is considered an altcoin in some people's minds. In my mind it's not, but Ethereum gets highly influenced by BTC, so you'll see some abnormal action going on here. Some sort of pops, and then we're gone, and we're going back up. What's not a valid rectangle? Right in the middle. You kind of more want a rectangle bottom or a top, that kind of thing. I don't consider this a rectangle. You can see how many times it touches the edges compared to the previous one. This one doesn't, it touches, twice here, once here, and then it falls out. Oh, it's fine. And it's up and out, right? Like, in my mind, this isn't really a valid rectangle. Plus, you also come from lower and you go higher. Trend lines. So trend lines are a big thing. In my opinion, you want to trade trend lines in log format. I use all my charts in log just because it's more consistent and usually is more right. Lower time frames you want linear, but trend lines, you use a ray is what it's called, ray. You hit here, and you let it draw itself out. And look, we hit here. I didn't mark it to this one. It hit, right? So we're in this downtrend line. Once we break it, we're probably going to retouch it and then continue out. We'll find out if it is valid or not when the time comes. So we're bouncing off this one. We're not bouncing going up anymore. So you can say that we're in a bear market or a downtrend. These were valid going up. As you can see, we touched here, you continued on. And this is a log chart, so you have to remember that log is usually straight. And as you can see, we started going parabolic even in a log chart. Broke it, and these were where the lines lined up. So in my opinion, we might come back to one of these lines at least, but it's going to be a little bit to get there. And this is more, the more you touch a trend line, the more it actually is true in my opinion. And you can see this is what it's supposed to look like here. Not a valid trend line. Linear chart, in my opinion, is not a valid trend line, especially in long term here. You can see that you click here, and we click here, and you don't see this trend line until this one happens, and then you think, oh, this is the trend line, or you click this one and this top in linear, and oh, look, we're out of the bear market, right? But we're not. So that's why if you click these two tops in log, that's why it perfectly lines up with this one. In here you can see this steep downtrend. Oh, look, we broke it, but there's not any price action, so you can't confirm it, right? So these aren't valid trend lines. EMAs I never talked about in the previous video, I believe. I meant to. EMAs are valid, they can be invalid. Valid ones are common numbers, 50, 100, 200. There's other ones, 12, 26. There's a bunch, right? And usually whenever they touch or cross, you can confirm an EMA if it's valid or not, in my opinion. Depends who you ask. If they retouch. So if something retouches it, usually it is a valid EMA. This is more, this is ETHUSD. This one you could see. This one retouch here, here, and here. These are valid EMAs. Well, it's not a valid EMA because you can make them whatever number you want. A lot of people think they have the magic number. 777 is a valid EMA, or 1000, or 356. You'll find people that have these secret EMAs, and really they're like, oh, it's still bullish. Well, you can make the numbers whatever you want, but look how many times you retouch. You didn't touch a dang thing, so how can you tell me this is a valid EMA, right? So that's, some people, they make these up and they usually get a following and they say, oh, I got the magic number. I don't believe them. I stick to the basic ones that everyone's looking at. You want the majority of the money with you when you're trading. If somebody's bouncing on those EMAs and there's buys around there, you want those people to be with because they have the money and they're going to move the market back up to where it's supposed to be or back down to where it's supposed to be if it's above. So those are valid and not valid EMAs. That's basically it for chart patterns. Let's hope I got under 15 minutes and see how I do here. It looks like 30 minutes, so I gotta cut that down if I can. Alright, on to the next vid. Thanks.